so far at least. But let's chat a little bit more about markets and what one should be doing. Sunil Subramaniam joins in on the show right now. Sunil, hi, afternoon. A little bit of a shaky ground when it comes to the US tech stocks. So far, we've managed to escape the weakness. But do you think the US tech weakness is going to persist, and then will it rub off on us?
But interesting that you're asking the question when US tech is weakening and Indian tech is strengthening, because when US tech was strengthening and Indian tech was weakening, nobody asked. Right? So as you know, our tech has been the worst performer over the last 1 year. So I think basically this is about the fact that our IT services are in the real actual domain, and AI is a part of the new industrial revolution. So it is going to be of a promise and then a catch up to the promise. There will always be disappointments. There will always be over anticipation about the future in AI. And so I think that the US tech is prepared for a volatile ride, right? The future is bright for AI, and that's why the tech was running up. But as you know, the markets sometimes overreach themselves. I think that's what's happened over the last few months. And this is a bit of healthy correction. But over a medium term, I still see that AI is a good, solid foundation. And surprise, surprise, Indian tech companies, I expect them to adapt to the new AI journey and hence come out as winners over the medium term.
Okay, great. So that's the take with regard to IT. We've done quite a bit with regard to IT, but talk to us about the financials, Sunil. Not seeing them perform materially, especially the private sector banks. They've lagged. What next for that story?
Well, the reason for that is that a lot of it is in the price. If you know that it's the banking sector which DIIs have been supporting all the period when FIIs have been selling. And what's happened is that FIIs, when they sell, and especially a passive fund sells, 30-35% of that is the banking space, right? Now, DIIs, when they buy, they've had a choice between a much more value public sector bank versus a private sector bank, which is probably priced to perfection. So when I say price to perfection, which means there's no margin of safety there. So a little bit of bad news, little bit that the growth is slipping, it means that they are always in a 10 side. Whereas in the public sector bank, on a price to book, they are still much, much cheaper. And the future looks good for them for 2-3 reasons. One, government is solidly backing reforms in the public sector. And because of which you're going to see the capital limit go up to 49%. You're going to see good solid mergers of good quality banks in the PSU come back and come up in the global rankings. You're going to see them access international capital more because of that. And when the private capex journey, which already the green shoots are visible, when that picks up momentum, you will see that it's the SME, MSME which has to execute that expansion order. And it's the PSU banks which are ideally positioned to lend to that segment. The private sector's experience at lending to MSME has not been great. So they are seeing that there is a little bit of NPA pressure there, especially in the NBFCs who have ventured there. But public sector banks know that space well and know how to ride that space. So I think that the attention is on the public sector banks, and that's why private sector banks are suffering in relation, I would say. Otherwise, in the immediate future, I expect the lending growth, the numbers that I saw are picking up. There's double-digit credit growth happening, and their numbers should be decent. But just like I said, they are priced to perfection, hence the margin for error is very less.
The day's highs for Nifty, and I guess propelled by the Nifty Bank, because that's also scaled a fresh high. SBI, of course, is one such case in point, which is contributing quite heavily. ICICI Bank also holding out about 0.5%. And Kunal, it almost seems like it's a thing of forgotten past, what was happening in the, in the US equity markets, and that fear of a rub off on us.
Yeah, I think today's move is very solid, and it's probably an indication that our markets are looking far beyond the global cues, what's been handed over to us over the last few days specifically. So I think, that's a very positive sign. We were discussing this earlier also, that, our market internals have been very strong. With every passing towards 26,000 mark, there are new sector additions which have happened. PSU banking stocks have been one of the strongest one, but today you have the IT stocks which have managed to make a comeback. So, and the number of weaker sectors over here, or the impact of the weaker sectors is not getting felt from the market perspective, and that's why even after mild retracements from those 26,000 mark, we time and again you come to a retest. Now with this data where we are seeing put writing emerging at 26,000 mark, 25,900 levels, I think the traders are going with a bullish stance for the next couple of days. into the Nifty on the monthly series expiry, and that could probably be an indication that we may cross over to that 26,200 levels pretty quickly.
Well, another couple of stocks which are languishing. In fact, one is a Sammaan Capital. There's a Supreme Court order pushing the CBI to file an FIR against the company. The stock is taking a 7% knock today in trade. We've seen that after that order came out. Also, KEC International clarifying that the embargo on new orders coming in from Power Grid is unlikely to be material for them, but despite that, that stock down 10%. We'll speak about both of those. In fact, let's go across. We have Kanishka with us to talk to us about exactly what's played out with regard to a KEC International. Kanishka.
Well, yes, KEC International is in focus today, and it's under heavy selling pressure given that Power Grid has barred the company from participating in ND tenders for the next 9 months from here on. Now, this Power Grid action comes as from an alleged breach of contractual terms, which is a matter that KEC had already disclosed to the exchanges on March 24th, 2025, that is earlier this year. Now, remember, this restriction does not impact the ongoing project. That's the word coming in. So let me tell you what triggered this. Now, the ban linked to an alleged 2.5 lakh bribe paid for favors in bill processing on Power Grid contracts. On March 24th, the exchange sought clarification from KEC after reports claimed that a Power Grid GM and KEC executives were involved in this bid. Now, the CBI's FIR in this case is also named KEC and its senior executives. Now, KEC says that it is exploring all legal options and is engaging with Power Grid for a review in this matter, that is a ban of 9 months that has been imposed as far as the new tenders are concerned. It is also maintained that it does not expect any material financial impact on the company thanks to its strong order book, while reiterating its commitment to governance and compliance. It says that it is fully cooperating with officials. Just for context on how much this could actually impact KEC International's TND segment is the highest one, that is the largest one. It has a 65% share in the company's order book, and year to date, that is in this particular year, 17,000 crore worth of orders have been recorded within this year, which includes a 1,700 crore rupees order from Power Grid, which means it is actually about 10% of the total order intake that the company has seen. So yes, it could be an impactful situation, and that's also showing on the stock, which is under heavy selling pressure today.
Yeah, KEC, Sammaan Capital, Biocon, Hudco seeing some profit taking after a big move in the stock the last 2 trading sessions. Well, you know what? We'll slip into a very quick break. When we come back, we'll discuss some of these buzzing names.
Welcome back. You're watching Closing Trade here on ETNOW. Let's go across. Let's talk about a few stocks which are doing very well in trade. One is an Avanti Feeds, which is perked up 11% in trade. You have a Linde India. You have a Latent View. There's an Intellect Design, Endurance Tech. It's dominated by IT, but then you have some bit of flavor with regard to the India-US trade deal likely coming through, also playing out like an Avanti Feed. I want to talk about maybe some of those stocks. Kunal, a Gokaldas Exports, a PDS Limited, and Avanti Feeds. How do these look on charts, and what could a good opportunity within this pack be if at all a trade deal were to materialize?
Yeah, I think out of this, we are seeing very good recovery. So, you look at this in the context of the April-May period where these stocks were, and after the 25% correction broadly for Avanti Feeds, for example, the stock was at 900, went down to as much as 640, 650 levels. And now the stock has come back to 850 mark. So, which means it's managed to recuperate the entire or most of the losses which it had faced after the news flow. Same is the case with Gokaldas Export. The stock now comfortably at 900 plus levels, inching towards a breakout on one of the swing indicators which you look out for. So I think on the short to medium term charts, we are seeing evidences where many of these stocks have recovered more than, say, broadly 50% of their correction, and some of them are coming closer to a breakout of the previous highs. That as an overall sign is a very, very encouraging signal that we are looking at the markets trying to buy the negative news flow into these stocks and expecting that once a turnaround happens, you would probably expect that these stocks would come back to their previous swing highs and more.
In fact, since we're on the subject, let's take it across to my colleague Samir Dikshit as well. He's picking up some chatter in New Delhi about a PLI for the textile space, and the government has approved 17 new applicants under the PLI scheme. It has also withdrawn quality control order on viscose staple fiber to aid the textile industry. Over to Samir for more details.
In a move to provide much needed relief to the textile industry, to support the industry, the government or the textile ministry has removed the quality control order QCO on viscose staple fiber. Now, this viscose staple fiber VSC is a very important raw material for the textile industry, and the industry has been constantly demanding that the QCO has actually further stringent the norms, and this has led to the decline in the import, and also the cost has gone up significantly, which is making sort of a challenge for the textile industry, especially in terms of the apparel. The finished product that they are looking at, it is getting more costlier, and in a very competitive environment, especially when the Indian textile industry is not just competing with the neighboring country, but also to sustain the export momentum as well. So seeking that sort of challenge, now the textile ministry has removed the QCO as of now, the quality control order on VSC, and government or the ministry understand that this will help to ensure the uninterrupted supply of the raw material. The cost stability will also be there. In addition to this, the textile ministry has an ambitious target, and they have set a vision 2030 for itself. And this vision 2030 is that basically they are going to achieve $100 billion of exports by year 2030. And not just export, but also when it comes to the apparel segment, they are looking to have a target of $350 billion. So that's quite an ambitious target. But to achieve it, the textile industry, which is the most important stakeholder, they have to be supported well, and for the same, this policy tweak or the removal of QCO has been done by the government so as to ensure that whatever the support is required or the raw material availability is required for the industry, that remains in place and no interruption is there.
Okay, thank you so much for that, Samir. Now, we spoke with Satyendra Singh, who is the CEO at Sirma SGS. He says that the PLI approval for telecom and IT are in operation. Listening to what else he had to say about the government's recent approval of 17 more projects under the ECMS and how it will benefit Sirma.
Overall, PLI, we have approvals for PLI for telecom. We have approvals for IT. And those are the two PLI which are in operation. And we have been benefiting from that. And in terms of future, I think we have got the approval from PCB as well as on the camera module. So these are the 4 PLIs which are in action, and we are kind of making sure that we are using those benefits coming from the government and working with our customers to ensure that they are working with us and getting the benefit of their supply chain as well.
Well, still in conversation with Sunil Subramaniam, and let's just take stock of what's happening in the market. While IT, of course, is rebounding nicely, it's banks all the way which are also giving that due leg up to the indexes. So banks, and of course, other than that, you've got a Max Healthcare, which is holding out well. There's Nestle, there's Titan, ONGC is holding up higher. iSure, M&M, ICICI Bank are where you're seeing some material moves come by. On the weakening side, though, you've got a Tata Motors passenger vehicles, you've got Maruti, Bajaj Finance, and Hindalco, which are the ones which are under pressure. Sunil, what's the call now on the PV segment of the market? While M&M, of course, is dominating, but M&M, of course, has, other businesses as well in the listed entity. But pure play passenger vehicles, what's the call?
I think that they've seen a good leg up in the festival season. Now there will be a bit of a lull, but again in Feb, March, the depreciation aspect will lead to a boost in sales. And normally, historically, March and then the first 2 weeks of April, where they do invoicing for March itself, are very strong months for the passenger vehicles. So I think that any temporary lull could be a good time to accumulate, because the whole GST rate cut thing will play through the whole of next first half of next year too.
Your biggest beneficiaries of that rate cut, how would you play it?
Well, the best way to play it, I mean, if you look at it, is the mass market, because I think the GST is going to make the biggest difference, because the biggest drop in GST has happened in those vehicles, right? Because the higher vehicles are treated as sin goods and the GST rates remains high. But that doesn't mean that there'll be a fall in those sales, but incrementally, if you see, it's the entry level cars which have suffered over a period of time because of the K-shaped recovery in the auto segment along with other consumption. So I think the bounce back will be the biggest. I would still bet on the entry level space of the cars up to, let's say, 7-8 lakh rupees as the biggest driver of growth for the PV segment.
Okay, that's the take coming in on autos right now. Well, of course, tech is the one which is actually holding out. But Kunal, let's revisit your call on Hoodco. You were very bullish. Today's weakness, should this be bought into?
Yeah, so I think I would look at this as an opportunity for content traders to look at a buy on Hoodco. Maybe not at current levels, but I think closer to 235, another 1.5%, from current levels could be a very good zone where, the stock may find its near-term bottom. The breakout with the stock had shown a couple of days back was on the back of very high volumes. Today, volumes are a little bit on the lower side, so which means we are looking at this as a more of a mean reversion play for Hoodco.
Okay. Let's talk about some insurance names as well. Let's pull out what an LIC is doing, maybe over the last 5 days as well as today. Let's see. Let's zoom into that stock. There you go. Life Insurance Corporation worked up 2% over the last 3 months. Well, nothing much, but today up 1.6%, and that one is showing some amount of zing. Outside of that, let's talk about some lenders. Within that, M&M Finance is doing fairly well for itself, 2% higher. And within the banking pack, some of the smaller names, a South Indian Bank and Ujjivan Small Finance Bank, a PNB on the back of the rating upgrade by Moody's, Bank of Baroda, and even some of the other PSU banks seem to be doing fairly well for themselves. I wonder what a Canara Bank is doing. Well, that's up only about 1%. So that rating upgrade, while doesn't change the cost of funds materially, but you may have some of these names which may do well sentimentally on the back of that. But talking about PSUs, let's listen in to the excerpts of an exclusive conversation which our colleague Anurag Shah had with Ratnakar Patnaik, the managing director at LIC, on their Union Budget 2026 wish list and growth outlook. Listen in.
Want to pass on the entire benefit to the customers. We have done so. Similarly, for the agents, the commission rates were rationalized well before the GST amendments, GST modifications came. So we did not touch the agents commission as of now, but such a big organization, we can surely do something which can take care of the whatever we are losing, likely to lose in input, in the form of input tax credit.
Okay, so what can be that, and what would be the quantum of input tax credit?
It is very difficult to quantify now, but I would like to tell you, thanks to Government of India, after the post GST, the reforms, now the Q3 has been very good for the corporation. We are growing very fast, and hopefully this will help us to end the year with very good growth rates for the corporation.
Okay, so you mean to say that in a whole year, Q3 is going very good, and we have seen that most of your business in month of February and March, we see a huge surge in LIC's business. So you mean to say that in Q4, there will be a big surge in insurance premium because of the GST reforms, and there is no reduction in agents commission?
Yeah, I am hopeful, I am optimistic. There will be good performance in the Q3 as well as in the last quarter of the financial year.
And you will be able to meet all your targets?
I am hopeful.
Right, okay, that's the LIC MD speaking exclusively with us on ETNOW. But the Union Budget 26-27 is expected to underscore the transition of NHAI towards a self-sustaining financial model, shifting its capital expenditure dependence from government grants to now revenue generated through asset recycling. The upcoming budget, in fact, as we understand, is likely to have a big focus on 4 pillars. That's asset monetization, long-term strategy to reduce budgetary dependence, encouraging more private participation, and investment and adoption of new age technology to scale up quality construction of infrastructure as well. In fact, I'm going to take it across to my colleague Samir Dikshit and find out what he's picking up on this. Samir?
So sources are indicating that when it comes to the budgetary allocation, the quantum may not be very exponentially high. It might be similar to what was allocated last year for the highway sector. But this year, the upcoming union budget will be focusing that the highway sector becomes much more self-sustainable in the sense that the dependency on the budgetary outlay has to be reduced, and for the same, a long-term strategy will be adopted. Secondly, the asset key driver for this year, if you see, NHI is anticipating a gain of roughly around 30 to 35,000 crore. But for the next year, NHI is estimating that they will get an estimate a revenue of roughly around 40 to 45,000 crore. But to achieve this, there are basically two models which will be adopted aggressively. The first one is the InvIT model, which is infrastructure investment model, and the second one is going to be the TOT model. So when it comes to the InvIT model, we are picking up from our sources that public InvIT model could be launched by the government, where the private investment will be encouraged significantly. In addition to this, the government is also likely to introduce two to three important large projects under InvIT model. When it comes to large size, it simply means that above than 8 to 9,000 crore project. So based on these sort of pillars, the Highway Ministry is looking to become self-sustainable. We are also getting to know that an aggressive spending will be done to induct the advanced or new age technology, especially driven by the artificial intelligence, the drones adoption. So in this sort of direction, we can say that significant amount allocation could be done, but major focus will be on asset monetization and drawing a long-term strategy to reduce the dependency on the budgetary outlay.
Okay, all right. Thanks so much, Samir, for that. I want to also quickly carve out a couple of more stocks which are in focus today and which are buzzing and doing well for themselves, and probably ask Kunal for a view. Archean Chemicals, Kunal, I'm not sure if you track this one, 5.5% lower in trade. Graphite is the other one, but it's even in general a volatile counter. So that one also down 4.5%. Orient Electric is the other one, down 4%. Any of these on your radar as potential opportunities?
Not really, none of them.
Okay. Biocon, Kunal, 2.7% lower. There's a double downgrade by Citi on Biocon. The technical take here?
It's a very difficult stock to trade, frankly, Harsh, because the stock has this tendency of coming into breakout at the peak of momentum when you feel that the stock is getting ready for a higher dimension breakout. By that I mean from a daily breakout you convert into weekly and monthly breakouts. Biocon has faltered multiple times over the last 2 or 3 years. Even the recent charts, I think yesterday or day before, the stock was almost at 420, 425, and 425 being a swing resistance. The stock, had shown confirmations of intraday signals of a breakout, but then from there the stock has slipped back again and is now back towards 408.9 mark. So this makes the trade a little bit more difficult. In an ideal scenario, I believe that buying this on retracement or key supports is a far better strategy for trading Biocon. The nearest support which you can look out for is closer to 385 to 90 range for the stock. If it happens to come back into this kind of a territory, then it makes a lot of positive risk reward for traders to go for a buy on Biocon.
Okay, that's that on Biocon. Sunil, curious to know where within pharma are you scouting for fresh opportunities, if at all, or where is it that you have your overweights?
So I would say it's a barbell strategy. So one side of the bar is domestic healthcare, hospitals, and diagnostics and the like, where there's a good growth path, good earnings growth, and a stable business model, which is ever rising. Okay. But on the other side, as a contra bet, is the export-oriented pharma, the non-generics. Because the generics are by and large chipping along. But the CDMO pieces and the product pieces, right? There, because this whole tariff overhang is still there on that export-oriented sector. So it's a risky call, but I think that balancing that's why I call it barbell approach, is an allocation, I would say, between 65% into the domestics and 35% into the export-oriented pharma.
And Sunil, within auto, do you have a preference? Four-wheeler, which is passenger vehicle, would you like CV more? Would you tilt towards CV with rural probably coming back? Or would entry-level two-wheeler be the way you'd play this?
So I would play two things here. One is definitely the entry level two wheeler because I see the rural demand translating there. But apart from that, my focus will be on CV because I see private capex starting its journey to recovery, and it's a long term journey. And commercial vehicles are a key part across LCVs, HCVs, MHCVs. All of them are needed for transportation and logistics, which will tailwind ride on the capex recover. So for me, the CV space from a medium term outlook looks like a very good bet at this time.
All right. One of the star performers, Sunil, has been Shriram Finance. It's done ever so well over the last 3 to 6 months. Is this something which is on your radar? They've been very, very consistent with their ROAs. 2.8 to 3% odd is what they've done over the last 5 quarters in terms of ROA. Does it currently, given or post this rally, does it look attractive to you?
See, to me, I generally don't talk stock specific, but especially for me, CV comes with the CV financials in top. So obviously for me, if I'm bullish on CV, then every CV financier is because 99% of the vehicles in the CV segment are financed. And in this kind of a journey on the private capex, you'll see a good second-hand trade. So lenders who are focusing on financing second-hand commercial vehicles are obviously also have very good healthy margins. So broadly, like I said, along with CV, I'm positive with all the CV financiers also.
Sunil, what about the capital markets theme? I was just looking at BSE. It's hit a 5-month high. Volatile as it may be, this is, of course, a structural story, and who would know better than you? But where within the capital market theme do you still find opportunities and value on the table?
So for me, asset management companies, they've done well. But I see that's the way of the future because I see a lot more new asset management companies coming into listing space. You know, when a new listing comes in, it takes the whole sector up generally. And I think there are 2 or 3. There's IPRU and then there's SBI, the asset management arm, which is likely to list. So I see asset management as a big, big play. That's number one. Second to me are wealth managers, the distribution and the wealth management companies, because I see the whole income tax cut, GST cut also playing its part on the savings field, and the penetration of mutual funds is largely driven by these distribution companies and the broking houses. So I would say that those are the 2 sweet spots. Insurance, I'll wait and see. I just heard the LIC chairman speak, but I'd like to know whether that input tax credit, how is it really going to play out? Because only a strong market expansion can cover for that input tax credit loss. So whether that's going to happen immediately or will take some time, I'll wait and watch on the insurance side. But apart from that, on this thing, I'm bullish. Like I said, asset management, broking and wealth management, and the capital market infrastructure companies.
The next mega event is 2.5 months away, and it's the budget. It's the union budget. How should one gear up for that? Because, in a month or so from now, conversation as well as stocks will start tilting towards those budget related themes. So try to gear up for that.
So for me, I think the announcement of a big few PSU bank mergers should be the highlight of this budget, because financing for the country is big need, and PSU banks, I think, on the government's radar. Noises are coming on that. So I expect that the budget will be dominated by announcement of few big PSU bank mergers. That's number one. Number two is the balance between infra and giveaways. We do have some recent big elections coming up in the coming years, and so the government has to do a balancing act between sustaining the infra. So I don't see the infra getting expanded, but there would be a lot of directed, I would say, developmental populism as a focus of the budget, which is not a bad thing, though from a fiscal perspective, it doesn't look as great as saying I'll spend more money on capex. But the fact is the government has realized through multiple budgets that you have to put money in the hands of the people. So I think that some more rationalization on the tax front and putting money in people's hand, but in a way that will support development. That's the balancing act the finance minister will do. And I'm eagerly watching for that in terms of how do they actually transfer money onto the middle class and the spending population through the budget in a way. So I think those are the 2 key things for me to look out for. PSU mergers as well as the other part recently a colleague mentioned in terms of the InvITs coming through. So I think that getting the private sector to participate in the government capex through the PPP model will also be a big initiative the government will do, because they don't want to let the ball off on capex, but their hands are tied because of the GST cut, the revenues and all could take some time to pick back up. So I think they will also focus on the PPP model. And along with it, sorry to add one more point, I think that the PLI scheme has got to be modified in the context of the tariff and the other pressures that the sector are facing. Manufacturing, to boost private sector manufacturing in India, the PLI has only been partially successful in, let's say, the EMS space and all of that. But they have to widen it and get this whole Atmanirbhar, Make in India concept also a great big push. And so that's the fourth pillar on the budget that I expect the budget to give some clarity and direction on.
Right, indeed. Okay, let's address some other piece of news and an update coming in from the Supreme Court on the IHFL case. Now, the Apex Court has questioned the friendly approach of CBI and MCA in probing allegations against Indiabulls Housing Finance or Samman Capital, as it's now known. My colleague Ankur Mishra is here with more details on the same.
Yes, Supreme Court has indeed questioned the approach of investigative agencies such as CBI and terming it as a friendly approach towards probing the matter related to IIHFL, which is now known as Samman Capital. The allegations were that the money was routed and rerouted through shell companies. There was a fraud which was committed by erstwhile promoters. Now, Supreme Court has urged today CBI to file an FIR, noting that it would strengthen the ED's position, and has directed CBI to submit its response why actions were taken which were not at par what court would think so. But the company has come out with a response. In fact, these arguments were given in the case during the hearing, and they mentioned that it is a professionally run company. There are shareholders like LIC, BlackRock, among others, and there are 4.5 lakh public shareholders, and former promoter Sameer Gehlot has fully exited the company in 2022 and 23, and no case has sustained till now. And therefore, now what will happen? ED has assured Supreme Court that the joint meeting of investigative agencies such as ED, CBI, as well as market regulators SEBI and SFIO will be held in 2 weeks, and they have filed the complaints with the EOW of both Mumbai as well as Delhi. These were the submissions which were given by ED in the Supreme Court, but all in all, this matter will now be heard on 17th of December, and then we'll get to know what is the stance of the court.
Okay, and on the back of that, firstly, thank you so much, Ankur, for that. 13% lower on a Samman Capital. Kunal, do you have a view on charts with regard to this one? 13%, is this an opportunity again, if at all you see one?
See, I think after this kind of a news flow, we generally see, at least for the next couple of days, traders being a little bit more cautious because of, the kind of price action, the volumes which have shaped today for the stock on the back of this news. So maybe I think we wait out for another couple of days in case if there is no major follow-through price action on the downside. So today the stock, for example, is at 160 levels. Assuming if the stock settles, say closer to this 155 range, 150 mark on the downside, then we can attribute that maybe a near-term bottom could be at place. But as of now, maybe a wait and watch.
Okay. Kunal, a couple of other buzzers today. Gujarat Ambuja Exports. This one has been in that buzzing zone since the last couple of days. Give us your view on that one. Linde India is again doing very well, 6.5% higher. The volumes are strong here. Any of these which are on your radar?
So Linde India, yes, I think the stock was beaten down significantly. I think there was a point where Linde India had fallen very sharply below its 200 DMA. I think till yesterday the stock was almost at a distance of 1000 to 1500 points from its long-term moving averages. So after today's move, the stock seems to have narrowed that gap quite significantly. It's still trading below the 50 DMA. So that first level of resistance for Linde India is still at 6160, 6200 levels in thereabouts. So maybe another couple of percentage points move is where we can expect that the stock will come out into a strong bounce back and a trending mode on the upside. So as of now, 6200 is the first litmus test of a resistance for Linde India.
The other large company which is in focus is Bharat Forge. It's up 5% from the day's lows, so it's done ever so well. You have a view there, Kunal?
Yeah, this is a very strong breakout. In fact, Bharat Forge For example, I've tracked the stock over the last 1 month or so, where the stock has started to go into a very gradual, subtle uptrend from, 1200, 1250 mark, which is the breakout of its 200 DMA. The stock has gradually moved towards the 1440, 50 levels, which it tested today. So I think it's been a fantastic move for Bharat Forge. And this puts the stock back towards the breakout of its previous major resistance, just about that 1400, 1450 range. I think the last time the stock was closer to that kind of a level was in start of 2025, where the stock had made a high. So I think in that sense it's a very strong breakout, and we are now looking at a major change of trend for Bharat Forge. So it's a very bullish chart, and from a medium term perspective, I would look at say potentially 1550 to 1600 as a target range.
Okay, that's that on some of the buzzing stocks. But on that note, we'll let Sunil Subramaniam go. Thank you so much, Sunil, for taking the time out and speaking with us as always. But I'm going to hand it over to Snehi for the closing.